Ladies and gentlemen of the crypto space, we're live on a Friday, March 24th at 2:14 p.m. I wanted to get out some content today. I was a little busy this morning, but it's always important for certain things to be understood, and certain things that are most interesting to understand are things that were confusing or complicated even to me historically. And what I love to do, and I get a kick out of, is making them super duper simple. Like, holy shit, that makes sense. One of the biggest things that is complicated, that is confusing when you hear certain people talk about this is a deflationary environment. Inflation, deflation are terminologies used to describe a system. Consumer price inflation is a description of the prices that consumers are paying. Currency inflation is more currency units. They're two separate damn things. You could have currency deflation, you could have consumer price inflation at the exact same time. No one's ever said that. I've never really heard anyone else say it like that. Boom. So when I say this is an extraordinarily deflationary period for currency, the, there's plenty of questions to come after that. Like, what does that cause? What does that do? That's what's going on with currency. It's deflating, and it contradicts with what people see myopically for the state of the U.S. versus the state of the rest of the world. So you have to understand each individual system to have an understanding of the overall system. Currency is M0. It is a tiny drop of the big picture. I'm going to try and go super duper slow this stream. I want to hit home some good points. That's M2. That's currency, but also a tiny drop of the entire system. A little bit of base money. This is the ultimate currency. This is dollar bills, paper money, amongst whatever they've also created to kind of serve this purpose as base money. This is the fundamental unit of account, the dollar bills, the paper. M2 is not dollar bills, the paper. If I click on AmericanExpress.com and I get a personal loan, they are not giving me dollar bills. They are crediting an account with digits. And now the bank, be it American Express, if they're probably just going to transfer it directly to a commercial bank's checking account. There's no paper bills involved in that transaction. It was a credit of numbers, of liabilities. You folks have heard that term before. Those are owes you dollars, not dollars. But that's ultimately the real currency. The owes you a dollar, not the paper dollars. So where am I heading with this? I'm going to head back to the title of the stream, deflation. So if there's 100 billion, quadrillion, trillion, a lot of the owes you a dollar, and you see this, 909,000 to 5 million, this is trillions, to 5 trillion, $5.3 trillion, but there's three more zeros on the amount of dollar liabilities in circulation. This isn't inflation. This means jack shit. This is a fraction of this is a percent, probably single digits, of the total amount of dollar liabilities in circulation. As I said, if you get a loan for $10,000 from AmericanExpress.com, it goes into your checking account. That's not this. That's not this. This is used to back up, or that's complicated. So it's kind of like what's occurring with the banks right now, unrealized losses, and what happens the if the state of the balance sheet doesn't compute, then this charade is revealed. This is the same thing in many regards as what we've experienced with the banks. If everyone stops not just believing that dollar liabilities are what they are, but if everyone defaulted on their credit card debt and everyone defaulted on their mortgages and every bank defaulted on every loan they have and everything defaulted, this is what you have left. This is the collapsed state. This is the nucleus of this money system that they have created for us to play this game with. This game is scored in dollars. These are those dollars. Everything else is credits against those dollars. So, the Great Deflation, as I understand Jeff Snyder more and more, it is extraordinarily a deflationary environment. So what does that cause? That causes all sorts of distortions. What is a distortion? Some shit that is acting weird. A different pressure. Someone having more interest in something than something else. Behavioral changes. Fear. Less credit. Less credit if all of a sudden American Express turns off their personal loans. They're not making any more dollars. Someone isn't getting funding that needed or wanted funding. That means someone couldn't do something they wanted to do because they did not have the currency to do it. In this instance, they didn't have the dollar liabilities to do it. They didn't have the credit to do it. They certainly didn't have the paper dollars because they were literally going to get dollar liabilities to do it, not paper dollars. So that is the most important thing to understand. This is a gross deflationary currency environment. That means everyone's behavior is changing over the last 13 years since 2008. There is less currency in circulation around the world. How much less? An extraordinary amount less. I'd probably refer to Jeff to say how much actual less currency is there, and you'd have to do an aggregate assessment of you won't. This is Eurodollars. It's all the credit on the books of all the banks. And if there's fear in the market, there's no credit or less credit, and that causes a couple of things. That causes increasing prudence in people that have dollars. So if you have Berkshire Hathaway, what, 140 or whatever the hell billion-dollar liabilities they've had of late, they are more prudent with their deployment, and people are prudent with deployment means they're less likely, they're increasingly risk adverse, so they're less likely to deploy that capital. So it changes all these behaviors. And that also has an effect on us as individuals. If we're making marginally more money, the pay increase nominally, the number goes up, but the purchasing power. So this is why the consumer price inflation comes into the equation. Well, Ali, I don't have the screen up. It's just me talking, but I'll put it on the main screen. Oh, that's a good point. I was showing you Fred M0. So the deflationary pressure of money is causing the individual who no longer has access to the same amount of purchasing power to take on more risk. Um, so if you have, so the deflationary nature of money right now is causing people with dollars to be less likely to deploy them and causing people without dollars to take on more risk to get them. It's an extraordinary, perverse state of the economic system. So, opportunity evaporation, I mean, this basically hits the 2 points of the title to really hammer home that the word inflation and deflation is granular. It's applied to every system individually. We have a deflationary currency, global currency, which is distorting the behavior of people with dollars as well as people without dollars. The opportunities evaporating because people with dollars are not taking on the risk to do something because they don't know if they're going to get those dollars back. The dollars are getting scarce. The banks aren't going to lend. The banks are on the verge of having balance sheet complexities in aggregate, not just the margins like we've seen with a couple of banks of late. Why would they take the risk? Why don't they just buy their government securities? In fact, if interest rates are going to decrease, they're probably going to want to buy that shit before the interest rates decrease further. So they're getting their discount on the price point, the market price point of government bonds. This is the time, in these conditions, exactly when banks do not lend at all. Why are you going to lend if you could lock in 1 3 year duration and you're going to get that money from the U.S. federal government and you're going to have no risk of repayment, like home loans, you know? There's delinquency rates. So this is when opportunity is evaporating, and it's opportunity that's evaporating for us as well. Um, this is not for folks that have experience with 2020. This is not that experience. We're chasing fewer and fewer assets that are doing well because there's less currency being deployed, which means the prices aren't going up. If someone buys something, it drives the price up. If not, people aren't buying and they're selling, it drives the price down. So if there's less currency in people's pockets, the price isn't going up. Therefore, there's less opportunity. So it's all a feedback mechanism. It slows down momentum and it slows down sentiment and ultimately, they call it the Great Depression because that's an emotion. It's not something really applicable to finance. Depression is an emotional state for a human being. When you have a deflationary global currency system and an absence of opportunity, that drives out excitement, hope, adrenaline, leading to depression. So I find that period in American history an uh, awkwardly named, but I guess it's a knock-on effect. So if you have those conditions and it makes people feel that way, so I guess it's correctly named. Maybe it's not best named. So all this risk in the system right now, there's not much opportunity, in my opinion, for the few. The margins that excel at PvP, that excel at psychology, and have capital. It's easier to get capital. Small markets are ripe for large actors to extract capital from the smaller actors. Um, and that is a very simple player versus player biological equation. If there's a 10 million market cap asset that has $2 million worth of circulating supply, and someone comes in with $1 million+ of capital and owns 50+% of circulating market, circulating value, that is going to appear attractive to smaller actors. If the price point all of a sudden goes up 20, 30, 40, 50% because this large actor comes in to a market, the smaller actors are like, whoa, it's a bullish market. But it was a bullish market because of one large actor. Now 5,000 smaller actors come in with $10,000 apiece, but lo and behold, the vested interest, the one large actor that was able to drive this emotional sequence of events that led smaller people, smaller portfolio persons, to think there was an opportunity, but there wasn't. This was a biological scenario where a predator set a trap for prey. It's simple to describe how to navigate that type of scenario, or at least identify it. It is imperative to know who you're playing the game with. I've talked about this before, understanding the vested interest, understanding their alignment. You could have temporary alignments with predator and prey, but if there isn't, it's just obviously not the case the vast majority of the time. They're just there to capitalize on their large capacity to influence a market to drive excitement. This is probably a very critical period, especially in the crypto markets, for folks to remember that this occurs, specifically because there's a lack of opportunity in the markets. There's a lack of fresh cash flow, which means the larger actors are looking for opportunity, but the difference is the larger actors can create their own opportunity, as I just described. Let's take a look at the total liquidity state of markets. It's down. It's 134. It's down billions. Wow. USDT is sucking up capital from USDC incredibly. Look at that. From 43 billion to 34 billion, $9 billion. It almost all went into USDT. That's quite remarkable to see. Look at that chart. Purple versus blue. Wow. Let's isolate Ethereum. Mainnet still has a tremendous amount of capital, the majority. This is the largest liquid playing field in the entire crypto space, 74 billion. We go over to Arbitrum with its recent hype of the ARB airdrop has driven significant capital in, a 21% increase in stablecoin liquidity. There's going to be decent opportunities for smaller actors on Arbitrum. Just remember, when smaller actors see opportunity, the larger actors don't necessarily see the same opportunity. They see the smaller actor inflow as the opportunity for them to capitalize. Because never forget, this game is scored in dollars. Let's look at Optimism and see how it's doing. Is it keeping up? Marginal. It's dormant. Avalanche, eventually at some point, that's a big drain. Jesus, 5% on the week. Phantom has been obviously just off the radar. Marginal 405 mil. Polygon for the fun of it? 1.56 bill. Negative sum game. Less currency units that you could find. They're leaving the system. And clearly all that. Look what happens when it's deflationary. This is a deflationary environment for the crypto space. There is less currency units in circulation. The amount of currency is deflating. A balloon, it's shrinking. That's deflation. So what we have is underperformance seeking outperformance. And the outperformance clearly was driven by a large actor, Arbitrum, and their airdrop. And that drew in excitement, affected sentiment and emotions, and capital migrated from other chains to Arbitrum. And a marginally positive sum game for the entire crypto space week over week. USDT capital inflows. Look at that, 12% month over month. That's pretty interesting. So just be careful. in these types of environments, the predators rule, the prey have a harder time of capitalizing. And I would argue, as with every cycle of increasing liquidity and decreasing liquidity, the best thing we can do is assess what actual value there is in the crypto markets, what was meaningful. And if you compare 2022, the end of 2022, and it's really going to be 2023, 2023 is probably going to be a year of complacency, of boredom, of disillusionment. Like, oh, I thought it was going to be incredible, but it's just going nowhere. And this is where a person sold Bitcoin at 500 bucks. They bought it at 200. They sold it at 500 because they thought it was going nowhere. Why do I bring that up? Because that's exactly what I did. I bought my Bitcoin at 290 and I sold at 590 because I'm like, I needed the money. I wanted to buy something. And I was like, oh, it is what it is. Market's not going to go anywhere. So that's where we are in this market cycle. Um, let me let me answer some questions. This is obviously my train of thought, but let me synchronize with what you guys are thinking. Tapsy, yo, what's up, rational enjoyers? Yeah, we're gonna be as rational as we can in a market that's going to be filled with complacency until we get volatility, which causes the largest actors, government, state actors, to respond. What they do is influence markets either via psychology or direct influence, market intervention. This is not the way it was historically, but this is the way every government that gets to this point in its life cycle ends up. That if they don't intervene, there is no market. And if there is no market, there is no social order and there is chaos. So there will be intervention. The question is, what is it? What is their intentions? What is their goals? And can we respond to it constructively so we can find the place of outperformance as compared to the place of underperformance? And I think this entire market is the place for outperformance. The complexity with the crypto markets is there's not much opportunity. Because it's not going to be in just a random thing appreciating in price. This is going to be a time where the whole market realized what actually was significant, what was meaningful as compared to late 2018, all of 2019, where the market realized there was nothing. And that is a remarkable comparison that we can make to clearly state unquestionably it's very different this time. There is sticky capital. There was no capital in 2018 and 2019. There was no market. It did not exist, period. So there's things we could say that are definitive, things that we could say with speculation, things that we could say rational conclusions, such as what we talk about currency recycling and just the existence of money markets and forex markets and stuff like that. That's just a rational um, observation. The behavior of these systems are exactly like they are in traditional finance. So these are observations of things that have merit, things that are real in the crypto space, no matter what any critic or person or detractor wants to say about these markets. This is a market. HB, best 30 minutes of my day. Captain, pleasure. Are aura and lit conceptually the same? No. I'll explain briefly. Aura is a convex to curve, aura to balancer. Lit is more of a well, I guess it is an aura. Lit is more of a convex and an aura as and there is no balancer. Uniswap has nothing. It is equally one of the most interesting protocols and also the most uninvestable protocols in the entire crypto space. I mean, it's immutable. It's infrastructure. It has the largest transaction volume of the entire crypto space, yet there is absolutely no opportunity whatsoever on it. Arguably, there is opportunity if you could dominate from a liquidity provider standpoint. Marginal liquidity providers don't make any money, but if you could dominate 50, 60, 70, 80% of liquidity for an LP, you have opportunity because you own the market, you own it. And then not only that, you could capitalize on the volatility in the market. When you choose to exit, the odds are you could capitalize from a capital gains perspective. So there's almost no opportunity on Uniswap for small actors at all. Um, Lit turns Uniswap into a currency recycler system. So I mentioned a couple of seconds ago that there's little opportunity in the entire crypto space. Um, you can identify traditional financial infrastructure, money markets, the forex markets, obviously. Um, But the biggest and most interesting system to emerge is the currency recyclers. And those, whether they were intentionally modeled after sovereign nations and the way sovereigns create bonds to recycle currency units back into the system and lock them up for duration, that's how sovereigns manage circulating currency units. Now, that's not entirely the case with our current global financial system because of what the banks did. The banks created the global financial system right now. And that was done in the 1950s and the whole credit thing and dollar liabilities, how I started the stream. So these observations that I have about basically only a handful of protocols in the entire crypto space regarding currency recycling is just the foundational structure of how sovereigns operated prior to the 1950s with regard to bonds and currency recycling regimes. Went through the rabbit hole and I'm more confused than ever. Well, it's nothing much to be overwhelmed with. Aura, you're able to have people pay you to rent your votes. Convex, you're able to have people pay you to rent your votes. Lit, you're able to have people pay you to rent your votes. Curve, you're able to have people pay you to rent your votes. Velo, you're able to have people pay you to rent your votes. And even VE-BAL, you're able to have people pay you to rent your votes. The question that folks are probably thinking after I said that and have identified some of the most meaningful protocols in the crypto markets because of their currency recycler implementation are thinking, oh, now I don't know which one to choose. And that's a very complicated question that comes back to not necessarily understanding the market in which you're engaging, due diligence. That's more portfolio management, portfolio structure, portfolio health type types of conversation and questions to entertain. If anyone has any thoughts about structuring their capital, structuring their portfolio, do you have too many positions? Are you over invested? Are you diversified? Do you have enough cash? Is the cash only in a bank or do you have paper cash? Ask those kinds of questions too, because that is the only way to engage with any market. Because if you're not comfortable and if you have anxiety and frustration and fear, you're not going to be able to engage with any market. Whole point of everything a market has to offer is to be productive for you, such that you have to reach your goals. So to reach your goals, you can't have fear, anxiety, or frustration. So keep it coming, keep it coming. Dan, a pleasure. Killis, a pleasure. Lit bribes start small, but it's a start, and that's the whole point. Transaction fee recirculation to rentals is a recycling. That is going to pay as a third party source of capital financing the disruption of circulating supply for the incentive asset. Asset currency in crypto is kind of one and the same, But ultimately, the currency producer doesn't want their circulating supply to significantly increase. A circulating supply increase is going to be price depreciative. So they want a third party source to finance people to purchase it for a reason, because if they purchase the currency, they're going to pay them. So that's why the currency recycler systems work, because a third party is paying for less of that currency to be in circulation. Simple. Thank you for another informative stream. You have a good one. A pleasure. Hey, Noah, how much do you spend simply thinking? Well, always. This is all I do, be it at work. I'm just a very critical thinker. It's interesting the way people respond to me at the office over the years in my various tenures at companies. Um, I, I'm worse than I am in the past. I have pause now. I stop, I think before I speak. In the past, had much more anxiety. I had much more, you know, just quick responses. I just have much more patience now. It's been an interesting ride. Listen, guys, I had anxiety when I was younger as well, and I just remember that's the goal in life. We set goals, and you achieve them one by one, and you have to identify them first. The complexity is to set goals that are actually achievable, and then you iterate from there. So Shares Cappy Friday. Exercise. I fixed that one. Um, Arb airdrop, Jimmy. Yeah. What's that thing at? Let's take a look. Anyone notice solid? The reason this price action is what it is because there is no currency recycling. There is no one paying people to purchase solid. What is my pinned tweet? Fuck you, pay me. Otherwise, it's going to get sold. So that is exactly what currency recycling is. Someone is paying us to not sell something. Otherwise, it depreciates, especially because it's increasing circulating supply. No one is paying, or at least not a critical amount of capital is being used to finance circulating supply disruption effectively. And that accounts for this price action. What do we got? A buck 43? I haven't claimed mine. But look at this chart. It started at 3 cents on Unis Sushi Swap, but all of them, when you look on Deck Screener, it wasn't like the massive depreciative fish hook chart that some folks have been sharing on social media. Looks pretty much, relatively decent start for an asset starting at this price point, and then it's been very much horizontal, obviously with a fair amount of volatility from 260 to a buck 40, but that's not atypical for the crypto markets. I don't know. I'm just going to sit on it and let everyone else run around like chickens without heads. Brian, happy Friday. Dan, do you consider investing in multiple vote rental systems over investing, spreading too thin? You will. Here's the kicker. There is no answer to that. All there is sentiment, gut instinct. But you're thinking about the right thing. You're thinking, because if you don't, here's the considerations. If you don't have enough concentration, if you don't have a large enough position, the thing that you think is going to outperform the most, what does Buffett say? Buffett tells us if he put all his money into insurance, he would have made 10 times as much money in his life. So the biggest opportunity is often missed with excessive diversification. But if you're wrong, then the excessive diversification can be protective and allow you to survive to bet on the future another day. So I kind of break down the opportunity for crypto recycler systems this way. Ethereum mainnet versus everything else. Oh, that's kind of like domestic US versus the rest of the world. Ethereum mainnet has three meaningful tiers. Curve has established itself as the place for stables. There is not even a remote indication that that narrative is being disrupted anytime soon. People are comfortable, and when I mean people, it's not necessarily persons with $1,000, it's persons with $100 million. They didn't deploy an Arbitrum. We see it. They didn't deploy on Balancer. We see it in the volume. And also just the total capitalization. Was there over $4 billion on Curve right now? It has the most liquidity in the entire crypto space. It has more liquidity than Uniswap. Curve is the largest capitalized automated market maker by a far lead. Interestingly, it would be like Curve dominance if there was an AMM. Maybe there is. Yields, is there DEXs, liquidation volume, sex transparency? Maybe, can you do just DEX? I don't know. I'll look into it later. But Curve has $4.62 billion worth of capital, and Uniswap has 3.78. So Curve is meaningfully in the lead by almost $1 billion. Balancer is much smaller capitalization with $1.31 billion. Now, even more interesting, stables versus asset prices. Everything reduces to currency units. This game is scored in dollars, which means when I talk about 1 point whatever billion dollars on Arbitrum, there could be $10 billion worth of TVL. It's irrelevant. You have to sell a $10 asset for stable coins to capitalize. So all that matters in understanding the structure and situation and direction of a market is literally just looking at the flow of liquidity into and out of a market. So I urge everyone to always review the stables overview page on DeFi Llama, and it will highlight where capital is flowing. Capital flows from lack of opportunity to places with opportunity. Clearly, Arbitrum has a significant amount of opportunity. This is an empirical statement. How to capitalize on that opportunity is another story. How to prevent, the biological phenomena of a predator predating on you. Predating. That's another story. But this is where opportunity exists. What was my thought? So I'm still on you, Dan. So mainnet. Mainnet has three tiers. Curve, stablecoins predominantly, V2 Curve. It's meaningful. It's a big deal. But Aura and Balancer really carved out a name for themselves. Whether it was the currency recycle regime they came up with the novel voter escrow 80-20 positions, they probably iterated themselves into a bit of a moat, which is interesting because it's stable and it's a known place to deploy and to develop and finance liquidity if you are an asset creator, a protocol creator. It's kind of the favored place for non-stablecoin assets. And you can inspect that by looking at the financing of vote rentals on Warden, on Vote Market, as compared to the financing of vote rentals for Aura on Hidden Hand. It's a very different composition, but it tells a very interesting story. So Aura and Balancer have quite the position on Ethereum mainnet, which is meaningful because the place with the greatest opportunity is Ethereum mainnet. That's where the capital is. That's where the liquidity is. Even though you see a 21.12% change in liquidity on Arbitrum, it still doesn't mean much at all. There's $1.85 billion worth of capital on Arbitrum. There's $74 billion worth of capital on Ethereum mainnet. There's so much more opportunity on Ethereum mainnet as compared to Arbitrum. Bear in mind, change in liquidity conditions, it contributes sentiment pressures. If there's more delta liquidity on Arbitrum right now, everyone's like, oh, they're going to move their capital over, trying to capitalize, so on and so forth. So there's a whole, you know, calculation thought experiment that could be done to try and assess. And what it basically means to me in high level is it's a transitory opportunity. Folks are going to capitalize on Arbitrum and they retreat to safety on mainnet with the finality, with the amount of nodes and the whole conversation of the centralization, so on and so forth. Because Chris Black gets a lot of flack for what he talks about, but I'm rational, so I like what he says. He's right no matter what anyone says. The equation becomes risk tolerance, and it's not trust. No one should trust. You should verify. There's a risk profile associated with multi-sigs and who's controlling them, and he's right. Period. Efren, do you like GMX where you get paid to stake their tokens? Yes, I like GMX. And the funny thing is, Arthur Hayes, he's the whale. He's the GMX, vested interest. Probably has a good part, if not, it's one of the largest actors. And there's a reason why. Boy loves his exchanges. It's where he built his career. And his history is all dealing with markets, so he found his home. Um, Me personally, I identify GMX and shit that's going on Optimism as meaningful. It's infrastructure, it's trading, but that's speculation. That's not for me. My my interest is to own a forex market. When someone is done with GMX, they need one stablecoin versus another. They're going to the place with liquidity so they could get the best swap rate. And they're likely going to get that from a forex market as compared to a trading platform. Now GMX is cool. I've just if I'd be saying a different tune if I bought it at like $2 compared to what it's at right now. But it's just not something I would even remotely consider currently, considering the price point, where it came from, the amount of capital that I have available, liquid to consider new positions, and that's where I'm at with most of the entire crypto space. There's literally nothing in the entire crypto space that I would really consider a position in right now. I look very much to more mainnet, ready for production releases of Tapioca. Was probably the next thing on my radar. Um, but deployment of capital, maybe that's about it. But I think of maybe like 10, 15, 20% of my available cash position is something that sounds interesting. Obviously, I need to see how it launches. There's probably going to be a frenzy over it. There's large Discord activity, there's large social media presence. I'm not going to overpay for shit. Why? Deflationary global currency regime causes people to take excess risk, which means there's frenzies over stuff, which means there's a propensity to overpay for something. I'm not going to overpay for assets in a market that is fighting over available currency units because there's a lack of them. Look, as currency units drain from Ethereum, 3.36. You could take a peek at TVL as compared to total stablecoin liquidity. There is now less stablecoins to purchase as compared to total valuation of assets. That means the currency units, even though they're a dollar, they're pegged to a dollar, they're more valuable because there's fewer of them. Hope that helps. Troy, thoughts on tapioca? I pretty much just said that, answering Efren. I look forward to tapioca deploying. I quite enjoy my relatively modest IPOR position. Uh, the other one is Bunny, with its currency recycler coming on yesterday and Hidden Hand being populated with a fair amount of capital. 13,000 is nothing to sneeze at, and that's not um, protocols deploying capex to finance their liquidity interests. That's just transaction fee recycling from protocol and liquidity, or just liquidity that the protocol uh, is receiving transaction fees for, and they're recycling it. So Bunny catches my fancy. Let's take a look at some charts to understand where we are in markets. Um, with regard to Bunny and Lit, the asset, you know, this is expected in many regards for currency recyclers. I don't expect significant appreciation for currency recyclers, just conceptually. And Aura is a great example of that. Obviously, let's go to the 3-day. Here, look at this. It's horizontal. This is starting to really make sense to me, and I'm going to end the stream on this observation. It's completely horizontal. Yeah, obviously, crypto volatile. You're going from $4 to a buck 50, but in crypto talk, that's horizontal. That kind of volatility. This the structure of a chart to range, and a currency recycle regime is probably destined to really range as long as liquidity conditions are not significantly changing. Let's go over to curve. So if you zoom out to the monthly on curve, the monthly on curve. So notice how I look at assets. So I know it's a massive range, and you could very much neglect this initial wick because this was a hyperinflationary period in its life cycle, and it wasn't significant to the function of the protocol and how it behaves and actually operates today. But what do I see here? If you neglect that initial period, that shit is horizontal, ranging. Let's go back to Aura. Horizontal, ranging. Initial period, some attention. I mean, this is horizontal and ranging. So, that's just a very interesting correlation or similarity between three currency recyclers right now. It's just horizontal. Maybe when there's two, three, four, five, $10 trillion in the crypto markets, these things get upgraded to a multiple, but it's not like you're going to get that 10,000x on these types of assets, in my opinion. That's based on this similar expression, this similar behavior that we literally just saw in three charts. You're like, oh shit, they're all horizontal, but they're horizontal for a reason, which is what we were just discussing. It makes sense. Um, IPOR is a little boring. It doesn't have currency recycling per se. It has decent tokenomics with regard to escrow and vesting periods and redistribution. If you remove capital, remove your earned income early, portion of it gets redistributed to vested interest that has more of a long-term alignment. Um, so, you know, a great stablecoin yield. Uh, so for me, uh, that's the way I'm playing this opportunity. I had put for context, I have 1 to 5. I put 1 unit of IPOR to 5 units of stablecoins, and that's all I'm doing. It's a relatively modest position in that regard, but it produces 63% return APR on stablecoins, and how that plays out over time, duration, yet to be seen. But ultimately, the liquidity availability to the protocol is required for it to even offer interest rate swap positions to people. So, you know, this is very early stages, but I have, they were receptive when I mentioned SFXS ETH. And if you could hedge your interest rate exposure, you borrow, you're earning 8% on your instrument, and you borrow and you're paying, 4%, you could pay 2% on 3%. You could pay 4% on an interest rate swap and break even, and you're effectively managing or hedging the risk associated with your 4% payment requirement on your stablecoins going up. If all of a sudden, volatile, unstable lending rates, you go on Aave, you can see it. It's the not stable rate. If it goes from 4% to 10%, great. I got an interest rate swap where I was able to convert that variable interest rate into a fixed 4%, and fortunately, I'm making 8% on my collateral, which is SFRX ETH, which is paying quite predictably, 6, 7, 8, 9, 10%, depending on market conditions. And you could look to like a WST ETH or even just base staked Ethereum in a node to get a sense of your minimum likely return that SFRX ETH will provide. The odds are SFRX ETH will always outperform the ST ETH, R ETH, and just the raw node staking position because of the incentive system that they engage with that incentivizes people to not deposit their FRX ETH into a SFRX ETH position. Should always outperform base interest on staked Ethereum, which is quite interesting. Let's wrap it up, boys and girls. Lake Meadows, happy Friday. ARB ETH is trading $1.29 on Uniswap versus $1.43 on Sushi. Time to ARB. Yeah, you got $1, 2, 3, 4, $5 million. Maybe you could crank out $5, 10, 15, $20,000 arbitrage opportunities. Otherwise, if you're gonna make $5 on an ARB, it takes a fair amount of precision, and ultimately there's a lot of MEV that is probably trying to capitalize on even remotely decent arbitrage opportunities. So it doesn't always work out as simple as it may seem. You could see the price difference there. If you get a little bit of capitalization, go get them. If you can crank out 100, $200 on a Friday afternoon, shit, there's nothing to complain about. But don't forget, this game is scored in dollars. So if you can crank out 1, 2, $300 arbitraging ARB ETH between two AMMs, take it in dollars, put it on a damn debit card, and enjoy an extra $300 over the weekend. Let's wrap it up for the week. Friday, March 24th at 3:08 p.m. As always, thank you all ever so much for joining me. It's been an interesting ride over these couple of years. Tell everyone to subscribe because we do better together. 31 people in the stream, 16 likes. Click that thumbs up button. I appreciate it. After party on Discord for the most rational community in the entire crypto space. Links below in the description.